Welcome to Just Some Guy Trading with 2021 World Champion Trader Kevin McCormick. Welcome back to Just Some Guy Trading. I'm Kevin McCormick, and this is my Trader's Outlook for the week of May 29th. This week, I'm going to be covering the S&P 500 and Nasdaq, natural gas, wheat, soybeans, soybean meal, and lean hogs. As always, my video will go in this order, so feel free to hop around to the items that make the most sense for your trading. As a reminder, this presentation is for educational purposes only. All right, we're going to start off by taking a look at the S&P 500 futures contract and what occurred this week. If you haven't looked at my special report on the upcoming correction I see coming to the stock market, I recommend checking out that video, and I will put a link up above for all my new viewers out there. Just to recap though, we were looking for the S&P 500 to move higher before the upcoming correction would happen. It was looking like when the week started that it was actually going to be just a decline, but we had the AI hype hit this week with the NVIDIA earnings, and the S&P 500 rallied back up into these highs. If we take a look at the Commitment of Traders report, the hedge fund community just keeps adding to their shorts. They now have the largest short position in place since the great financial crisis. I'm sorry, but I do not think we're in great financial crisis positioning right now. And this is the one piece that has me bothered about the correction that I think we are getting ready to have now, is because this short position, I don't know who's left to sell at this point. And I think that's going to be one of the problems that could prevent the market from having a healthy correction coming up. Now let's jump into the DeMARK indicators to see what happened with those this week and the on-balance volume. Okay, we have the S&P 500 futures contract up on the chart here. And as everyone has been watching me for the last few months, this area of resistance continues to be held with its TDST line going back to September 15th, with what I think will probably be our next upside resistance is properly in these areas from these August highs. Now, if we jump over to the SPY ETF, this is where we've seen the 13 came in last week that we discussed in my special report and on that weekly outlook. And this is where I think we can come up into these areas. And once we hit this area about here, 4,300, that's where I'm expecting the correction to occur. We may get a little bit of short covering up there. But for those of you that have watched the special report I did, on balance volume is my major tell right here. And as you can see here, we went up back into these highs this week on Friday, but on balance volume did not make a new high. This is going to be what I'm watching for the next week to see if this is going to be a correction or if we're going to cause a major short covering by the hedge funds and the market's going to push higher first. But as I said in my report, I think our move is going to be higher, and then we'll have a nice healthy correction. Now let's take a look at the setup in the QQQ and the Nasdaq. So in the QQQ, similar thing happened. We had the 13 sell, the 9 sell that we discussed last week and in my deep dive. But hitting again on that on-balance volume, we are back at the same levels of on-balance volume. But this week in the Nasdaq, we made new highs. On-balance volume should be making a new high with it, but we are not seeing that. I think the breadth in the market is declining, and we're running out of new buyers, unless, of course, we get the short covering rally that I'm worried about, as indicated by the COT report. So that's the quick outlook on the Nasdaq and the S&P 500. I recommend everyone go and check out the deep dive report from last week to see more about this setup. But with that said, let's jump into natural gas. All right, let's take a quick look at natural gas. Sometimes the best way for us to learn is from mistakes. I had a nice losing trade in natural gas this week. If everybody remembers from my weekly outlook last week, I called for, hey, let's get a little decline and let's see if we can get ourselves a higher low. When we had this percent R oversold signal, I took my buy signal. We moved a little bit higher, and then boom, the bottom of the natural gas market fell out. We broke this trend line, and it looks like we could be heading lower again, maybe back to these lows. The big problem we have with natural gas right now is demand. And you can see here on the COT report, as long as we have the producers of natural gas selling like crazy every time we get a little bit of a rally, we just can't get the natural gas market to move much higher. So really, I think natural gas is going to be a sideways market up until we get a nice heat wave that hits this summer, and then that will peak demand in natural gas. But until we have a demand shock event for natural gas, I think we're going to be stuck down at these levels for a while. Let's move on to the next chart. All right, let's take a look at wheat. As I discussed last week with the crop reports, wheat has a bullish setup while many of the other markets are in a bearish setup. It looks like the supply in the crop on wheat is not looking very good. So we have good fundamentals setting up what I think is about to be a rally in the wheat market. We can see that this week we stayed down below the moving average. But what I really like to see is this great commitment of traders report where the commercials have been in here buying wheat the whole way down, building a very large position. The people who need wheat for their products are taking advantage of these low prices. And the other piece that I really like is, as everyone knows, ADX is my favorite indicator for calling market tops and bottoms. We crossed above 40, which is my indicator level for when a market bottom could be in. But the added bonus to this, and we discussed it in last week's video, is we also have multiple DeMARK selling exhaustion signals right now in wheat. And I can tell you from my experience, when I get ADX and combo and sequential both calling for the end of a decline, it's an over 80% accuracy that a market is about to bottom. And that's what is making me feel very strongly about looking for a bottom forming in wheat and being able to catch what I believe is going to be an upcoming rally. That's it for the wheat market this week. Now let's take a look at soybeans and soybean meal, because we have some interesting setups there as well. All right, we're going to start off by taking a look at the Williams indicators and the COT reports for soybeans and soybean meal, and then we'll jump over and take a look at the combo and sequential indicators for these markets as well. So as you can see here, soybeans have been in a steady downward decline now, and as we've discussed, it looks like we're going to have record crops in soybeans if, it's a big if, the weather stays normal. And that always is the wild card in these markets. But in addition to the fundamentals that are going out there, we do have very strong technicals across the board in the soybean and soybean market showing that it's been oversold and we could be forming a bottom from a technical perspective. We take a look at the COT report. This is a textbook example of long liquidation by the hedge funds. As we discussed before, the crop report came out. They were heavily long. They started covering because the crop report was bearish. And wow, look at this decline in the hedge fund positioning, while commercials have actually been coming in and buying up the soybean contracts. Open interest has increased with the commercial buying. This is a very positive sign. And the last piece that I like is the good old ADX indicator is about to cross 40 in the soybean market, which means we're going to look for our slow stochastics to cross and indicate a move higher in the coming weeks. And that's when we'll want to start taking buy signals in soybean. Now let's take a quick look at soybean meal before we go jump into the DeMARK indicators. So soybean meal actually has an even stronger setup than soybeans right now. And so you can see here, similar chart, been following the moving average down, well over, very oversold in this market. If we take a look at the commitments to traders report, we did not have this same massive long liquidation, but still had a little. Commercials are in the buying area right now. Positive sign for us as small traders. But with soybean meal, it's undervalued against gold, the dollar, and bonds. Sentiment is getting almost into the area where I would call it a buy signal. The weekly, you can see right here, right now, we should start moving higher. But as everyone has noticed when I've been showing these up, we haven't really been following the seasonal pattern perfectly. But I think it's a time for a change. And then let's take a look at that ADX. Crossing 40 this week for the first time. Same thing here. Let's look for the cross in the stochastics, and that will be our signal to start looking for and taking buy signals in soybean meal. Now, let's go take a look at the DeMARK selling exhaustion signals that we're getting in both of these markets as well. As I just mentioned earlier of wheat, when we get a lineup between the ADX and the DeMARK, I have an over 80% accuracy rate for the bottom being called when these indicators align. So let's go take a look. We have the soybean chart up with the combo and sequential indicators from DeMARK. You can see here we had a 13 buy signal back here that did not hold, did not work. And now we've come down here into this area and we have a 9 buy daily setup. But more importantly, what I like right now is we have this combo, we're on a 10, which means we need about 3 more days of declines to hit, and then we might be forming a bottom. This aligns with what we just saw on the ADX, where we've just crossed 40, but it looks like we could have a little bit more time coming down and then get that stochastics cross. So I don't know if this week is when we can call for the bottom in soybeans, but I think for everybody out there, you should be keeping an eye on the soybean market. But let's take a look at soybean meal. It's a very different setup with soybean meal. You can see here, soybean meal and the DeMARK indicators have been hitting very well. Called for a sell here, decline, sell, decline, sell, decline. And then we had this move higher. Here recently, though, as we've been moving lower, we've been having all these sell setups, and they've all started to come into place. Similar to soybeans, we had a 13 here that did not really hold exactly, but we did finally get that decline. But here this last week, we had a 13 combo, a sequential 13, and we have one more selling exhaustion forming there in the background, which would align with what I was just saying about soybeans, is that the market for soybean meal is looking like it's trying to form that bottom as well. So I recommend for everybody to keep an eye on that. And the last piece to highlight here is I have absolute retracement on right now, going back to this high in soybean meal. And you can see here that the first absolute retracement level is right down here at around 379. So we could see a decline into this area, but that's why I think we're forming from a perfect technical perspective, multiple areas of selling exhaustion, despite the fundamentals being so bearish. I think we're getting oversold, and that any kind of bad weather is going to instantly cause a rally in these markets, and we should be looking for confirmed signals that the bottom is in. All right, let's finish up with lean hogs today. Here we are with the lean hogs chart. Not something I trade a lot, but I follow it for the great signals that we sometimes get in trading opportunities. As you can see here, another ugly chart with a major decline, moving lower for months now. But I think I see a bottom forming here as well. COT report, commercials have moved into buying once this decline started. They've been forming their position. They have a need for the lean hogs. We also have a nice fundamental setup going on right now. It looks like production for the next quarter will be lower than the current quarter, which will decrease supply, which is important in the commodity markets. These are demand and supply driven markets. But also, if we look at Williams valuation, undervalued against gold, dollar, and bonds. Sentiment is terrible, so this is a buy signal for us as well. And I sound a little bit like a broken record today with the pinch punch and ADX, but here we are just now crossing 40 in the ADX as well. So the same deal here. Let's look for our stochastic cross, and then that's when we should know that the bottom is in. But in addition to the great setup we have with the Williams indicators and ADX, we also have the DeMARK indicators calling for a bottom as well. So let's go finish up with that. All right, we're going to finish up by taking a look at combo and sequential along with absolute retracement once again on the chart of lean hogs. We're seeing kind of similar, to what we've been discussing with the other markets here. We have multiple indicators calling for a bottom forming and seller exhaustion in lean hogs with combo and sequential. And we also have the absolute retracement level from back here in February. We broke through this level and it was confirmed as resistance. That's why we have the solid line now. And we've broken through this level, but it's still dotted. We haven't had a confirmed breakout lower. And I think what's more likely here in lean hogs is we're going to bounce off of these levels and move higher from here. With that said, I want to thank everybody once again for watching Just Some Guy Trading and my weekly outlook. Don't forget to like and subscribe so you know when all of my content comes out.